Mr. Clay and members of the committee, my name is Mike Farrell. I run Annaly Capital Management. I'm the chairman and CEO and the founder. We are a large residential mortgage real estate investment trust, or a REIT, listed on the New York Stock Exchange. Collectively, between Annaly and the other companies that we run about $100 billion worth of mortgage-backed securities and mortgage loans through our portfolios as investors. I represent an important constituency in the housing market, the secondary mortgage market investors, who provide a majority of the capital to finance America's homeowners. Just for the Annaly family of companies, we estimate our shareholders collectively help finance the homes of 1 million American households, or 3 million American citizens. I'd like to begin by focusing on the fact that the secondary mortgage market investors provide 75% of the U.S. housing market capital. That is approximately, of the $10 trillion in outstanding home mortgage debt, about $7.5 trillion is funded by mortgage-backed securities and investors that fund those securities. Of that $7.5 trillion, about $5.5 trillion is in government-guaranteed mortgage-backed securities and about $2 trillion in so-called private label mortgage-backed securities. The balance, or $2.5 trillion, is held in loan form, primarily on bank balance sheets. Since our country's banks have about $12 trillion in total assets, there is not enough money in the banking system to fund our nation's housing stock for cash, at least not at today's current levels. It's axiomatic that without a healthy securitization market, our housing finance system would have to undergo a radical transformation. Right now, securitization is attracting significant amounts of private capital, at least to that part of the MBS market that is government guaranteed. The problem is that in the non-agency part of the sector, or the so-called private label market, it's dormant, and only one small deal has been done in the last 2.5 years. I now would like to discuss several reasons why the private label market is not restarting. First, the economics don't work for a number of reasons, but mainly because mortgage rates have to rise in order to compensate investors for the risk that they're taking in those securities. Second, there's a higher yielding alternative for investors who want to take more residential mortgage credit risk. Older private label mortgage-backed securities and seasoned loans that have been repriced and are cheaper by the market after the events of the past few years. As long as this disparity exists, it will impede the restart of the new issue private label market. The third reason is the difficulty in sourcing enough newly originated loans. Without the outlet to sell mortgages into securitizations, banks have gotten more comfortable holding non-conforming loans on their balance sheets, not only by tightening underwriting standards, but including sizable down payments. In short, banks are only willing to make loans to highly capitalized borrowers. The fourth reason is the uncertainty over the future regulatory environment. The many different mortgage modification programs and delays in foreclosures have made it difficult for investors to analyze cash flows. Finally, I want to get to the heart of the current debate. Can the private labeled mortgage-backed securities market come back and fill the gap that is currently filled by the GSEs? The short answer is yes, it can, but not at the same price and not in the same size. Most investors in agency mortgage-backed securities won't invest in private label mortgage-backed securities at any price or only in much reduced amounts because their investment guidelines preclude taking credit risk. These investors include money market funds, mutual funds, banks, foreign investors, and governmental agencies. Some investors could cross over, but we don't know how many or at what price, and we won't know until we have a lot more information to make that analysis clear. But back at the end of the day, I have to refer to my two market truths. First, securitization is the source of about 75% of the capital to the housing market, and the private label securitization market is not working right now. I thank you for your time today, and I look forward to your questions.